All right, perfect. So this is our last webinar in our Unlocking the Secrets to Real Estate Wealth series. So we've been doing these every Thursday this month. It's been great to have all of you with us. This webinar tonight is going to be a tad different. So Jill Dobb, she's one of the loan officers at Michigan Mortgage. She's our in-house credit expert. She's phenomenal. Unfortunately, she had a family emergency tonight and is not able to be here live. So before she left for the day today, I had her actually record her presentation into a short video that I'll be able to play for you. And then Jules, she is a loan officer assistant here at Michigan Mortgage. She's licensed, and she is an expert in all things credit and pre-approvals. So should you have any questions at the end of Jill's video, she'll be here to help. So you can unmute yourself, you can ask them. If you want to use the chat feature, you can ask questions while Jill's video is playing, and I can pause and we can answer those. And if you have to step out, no big deal, because we're recording and we will send this out later. So let's talk about credit. Jill is going to highlight some of the ways that you can build credit, why credit is so important. And before we get started, and Jules, correct me if I'm wrong, but for primary residence, if you're looking to purchase a primary residence, your goal should be always a 640. And then for investment properties, that credit score should be about 700. So keep that in mind as Jill goes through her content today, so you know what you're targeting and what you're looking for. All right. So I am going to share my screen. And Jules, if you could just give me a thumbs up to make sure you could hear it, we'll get started.
Hello, everyone. I'm Jill Dobb at Michigan Mortgage. I'm so sorry that I cannot attend the live event, but I am here to talk all things credit and why credit is so important. So when you have great credit, it opens up so many doors for you. You're going to get a better interest rate. You're going to have a better loan product. You are going to save on insurance, not just home insurance, mortgage insurance, your car insurance. So why not be a consumer that lenders are fighting for? It's going to save you so much money. You're going to get more for less. So let's get down to it. How do I get a good credit score? So there's so many different factors that play into getting your credit. So let me jump to I'm going to share the screen with you all. And then I click my PowerPoint. Am I sharing? Okay, perfect. All right. So we talked about building your credit and why that is important. I'm trying to share my next screen, but please, it's not going to my next screen. Perfect. Okay. So how is your credit score determined? So there's three factors that are very important to look at. So number one is going to be payment history. So the longer that you have gone with making your payments on time is really going to affect your credit and really help you out. So if you've had late payments recently, stop. Put everything on auto payment so that you stop the late payments, because I would say that is the most important thing. If you have late payments and you tell me you have late payments, my first question to you is going to be, why do you have late payments? Why? What's going on in your life? If you say, I went on vacation and I overspent and now I can't afford my minimum payment on my credit card, that is not good. Underwriters you're a high risk client. You don't want that. If you tell me I was a victim of identity theft, I had to stop all transactions going into my credit, into my checking savings account, well, that's different. Then we can explain to an underwriter why you had those late payments, and moving forward, we can prove that you're not a high risk consumer, and that moving forward, you can make your payments. So just a good rule of thumb, put everything on auto payment, auto deduct. And so that way, you know that you are not going to have any more late payments. there is, okay, so here we go. If we look at the screen, payment history is 35% of how your credit score is calculated. Another big factor is your utilization on your credit. So if you have a credit card, I highly recommend pay that thing off every single month. Who wants to pay interest? And credit cards have high interest. Don't pay your credit card company any more than what you have to. Use your credit cards so that you have great credit. So if you use your credit cards wisely, you're going to take advantage of them and you're going to be an 800 credit score if you use it correctly. So if you pay them off every month. Another thing is if you can't afford something to pay it off in a month, I highly suggest don't use your credit cards. Now, obviously, we all have emergency situations. If your car dies and you have to take it to the shop and you don't have $1,200 to pay your mechanic, that's okay. Put it on your credit card, but just try your best to pay it off as soon as you possibly can. I recommend keeping your utilization below 33% to get the biggest bang for your buck. But once again, if you can pay it off every month, that's really going to save you all that money in interest. Another big factor in determining your credit is the history of your credit. Are you a new consumer? Have you only had a credit card for a few months? The longer you have your credit, your lines of credit, the better your credit score is going to be. So if you've had a credit card for 5 years and you've had 0 late payments and you keep your utilization down to 0 or below 33%, you're going to have great credit. If you don't have credit, it doesn't mean you can't get financing. If you have poor credit, it doesn't mean you can't get financing. Today, I'm just talking about why credit is important to save you money and to be a consumer that all the lenders are fighting for to save you so much money. Okay, I'm going to go to the next slide. So here's some do's and don'ts on credit. Oh, before I go there, I do want to talk about Credit Karma. Sorry. So Credit Karma, I do recommend using Credit Karma not to look at your credit score as an accurate read. I like using Credit Karma. So if I call you and I say, how does your credit look? And you say, well, on Credit Karma, it's showing me that I'm a 720. That doesn't necessarily mean that I'm going to tell you when I pull your credit that you're going to be a 720. So Credit Karma uses a Vantage scoring system where the mortgage industry looks at your FICO scores. So that's the difference in Credit Karma versus mortgage industry pulls. However, if you make a payment on your credit card and you're like, I don't know if it's hit the credit bureaus. If you go into Credit Karma, you can see if they've marked your credit card balance as since you've made your most recent payment. So definitely use Credit Karma to see what's reporting on you, if your payments have hit, and then if it's a good time for me, the mortgage lender, to run your credit to see where we're at. So definitely use them. It's a free service. Why not use it? It's also going to show you if you have any collections. So let's talk about collections real quick too. So collections, not all collections need to be paid. So underwriters look at your collections, like medical collections, differently than if it's a car that you had that was repoed. That's totally different. You signed up for that auto loan. You don't sign up for medical bills. People get sick, people go and get hospitalized, things happen, family emergencies happen. So underwriters look at that debt differently than credit cards that are in collections, housing expenses. It does not look good at all if you have an apartment complex reporting on you in collections, because you want to prove to these underwriters that you are a responsible consumer. So here are some do's and don'ts with your credit. Do know your credit facts. Know what's reporting on you. I have so many clients that call me and they are afraid for me to look at their credit. Why? You need to educate yourself. Know what's reporting. We can fix it. I can't fix or help you build your credit if we don't know what's reporting. I can simply pull a soft pull credit. Everyone is so afraid that if I pull your credit, I'm going to wreck your credit. I will not wreck your credit. A soft pull credit just does a gentle look. It does not, you won't even get a notice on Credit Karma if someone's running a soft pull on your credit. It just takes a look at what's reporting on your credit without running a hard pull so that we can advise what needs to be paid down and what needs to be handled sooner than later. And there's going to be some things on there that you think are going to be very important for you to pay, when we'll advise that is not going to give you the best bang for your buck and by paying that debt. So definitely have a professional, a local mortgage lender, me, take a look at that, and I will advise on what needs to be paid sooner than later. Pay your bills on time. Number one, if you haven't been making your payments on time, start that today. Let's get right with your bills. If you want to buy a house, we have to prove to underwriters that you are a responsible consumer. Keep your balances under that 33% utilization. Watch your inquiries. They say that the average consumer has 5 inquiries a year. So 5 isn't bad, but just be cautious of that. If you have 0 credit, my first thing is going to say, go apply for a credit card. If you get turned down by a credit card company, don't go to another credit card company and apply. Don't do that. Apply for a secured credit card. A secured credit card is when you are taking your own money and that acts as your credit limit. So do that instead, but don't just start applying for 5 or 6 different credit card companies when you've been turned down once. Don't do that. Be your own advocate. Let's see, negotiate your collections for sure. So for example, if you have a housing related expense or a credit card company, or if your car was repoed, call that servicer and see if they will settle for less. Doesn't hurt to try, right? So see if they'll settle for less. If they say no, okay, well, at least you tried, because a lot of these servicers will take some money. So receiving some form of payment is better than nothing at all. But if they say no, they won't settle for less, see if they will take a payment plan and set that up, because 9 times out of 10 they will, because they do want to collect something for the money that is due. Also, do not borrow from high risk financial companies. That's a major no-no. So these pay in advance companies, these payday companies, they are charging you high interest on the money that is borrowed. So I do see that a lot of our clients go down this rabbit hole and it's hard to climb back out of it. So don't do that. Also, don't close revolving credit accounts. Don't do that. That's red flags all day long. If you've had a Capital One card that's been reporting on you for 24 months, and maybe you've had some late payments, that's okay. Get in the right now. Make sure you have no more late payments moving forward. But most importantly, don't close that account, because you've had 2 years of history with that company. So don't throw that away, because starting from scratch takes time, right? Good credit doesn't happen overnight. It takes sometimes years to get great credit. So work hard. It's definitely worth it. It's going to save you so much money in the long run, and be that consumer that people fight for. Open any new credit cards before a new loan. Yeah, don't do that. So if I pre-approve you on a loan for a mortgage, don't open up a whole bunch of different new credit cards. That's always a red flag. It looks like you are overspending, and underwriters don't like to see that. Let's see. So what do you do next? Well, everyone's credit looks different. Everyone has something unique. So if there's something on your credit, just give us a call. We will walk you through it. We want to put you in the best position possible to buy a house. We want to open up all of the doors for you, give you all the options, not put you in a loan that you're not happy with, that's going to have a higher rate. You're going to have higher fees. Build your credit. It only sets you up for success in your future.
All right. I hope everybody heard that okay. Jill was so bummed she couldn't be here, but I will make sure I send that out. Jamie, Denise, do you guys have any questions or concerns while Jules is with us?
No, that was a good explanation. Those were good tips.
Yeah, hopefully you can use some for your clients too, because I think that's, people have a lot of questions about credit. It's tough.
Right, because they think, oh, I have something that has dinged mine. Oh, I can't get a house, but
Yeah,
there's ways to work around it.
absolutely. Jamie, did you have any questions?
I do not.
All
Thank you.
right. Yes, well, thank you both so much for joining us tonight. A small group, but that's okay. If you have any questions, just reply to the email that I send you tomorrow morning. We are always here to help any way we can. And thank you for tuning in and learning more about this idea of building wealth through real estate and investing and finding your dream home and all the things. So thank you all. I hope you have a wonderful night and a great weekend.
Thanks,
Thank
Courtney.
you. You too.
All right. Thank you. Bye-bye.
Thank you.